Good morning, everybody. Hope you had a good week. We had another volatile week in the trade as we really tested new support levels and then finished really strongly to end on Friday and almost back up to resistance. December 22 corn is up 18 cents on the week, and November 22 soybeans ended up 4 cents on the week. For soybeans, we closed on Friday at $13.99. We did fail on Monday at $14 support and found new support at $13.05. However, we did rally very strongly to end the week, and $14 is now resistance. It will be a key hurdle now to overcome that level with some bullish volume and stay above there to hope that a bottom could be in. We really don't want to see that fail or get rejected because we could easily test 13.21 or 13.05 again if that is the case. Strength in money flows did turn higher and are creating some new positive trends. And also long-term momentum is still negative, but it is starting to flatten. So that is the first step to hopefully starting to put a bottom in there. Hedge funds really love to add to their exposure at extreme long-term support levels. So they love these types of moves because it gives them an opportunity to create a lot of volatility, which means more profit for them. If they add at long-term support levels, I'm sure a lot of hedge funds got in this week just for the trade up to $14. We'll see if they stay in or exit, and that'll have large implications on if we stay up here or move back lower. Managed Money sold 19,000 soybean contracts through this past Tuesday and are now net long 105,000 contracts. Moving on to corn, we closed the week at 625. We tested 578 support that I mentioned last week and ultimately made new support at 567, and then we rallied strongly into the close on Friday. Resistance at 630. That was support for a very long time, and now it's resistance. We need a lot of bullish volume to overcome that level and stay above there in base to hopefully keep that as a support level. Otherwise, if we do reject there, could easily retest those support levels that I just mentioned. Strength in money flows are trending higher and are creating some positive divergence, and long-term momentum is negative very largely still, but it is starting to flatten out, so that could be one sign of a potential long-term bottom unfolding. Managed Money sold 55,000 contracts through this past Tuesday and are net long 172,000 contracts. We do have a partnership with Heritage Hedge. The reason we really like working with them is because they develop a grain marketing strategy based on your farm cash flows, your crop budgets, and what your profit points per acre are. If you have any interest in working with them, please reach out to us. We can initiate a conversation and get you in touch. General updates. Crop conditions are continuing to move lower for the third straight week. Corn was down 3% again this week to 64% good to excellent, and soybeans were down 2% nationally to 63% good to excellent. Markets are assuming 177 bushel national corn yield this year. That's what they're trading. That will be tough to achieve if these new long-term forecasts are accurate and are showing hot and dry predictions through mid-July to September. Soybean fundamentals are very bullish. Ending stocks are very tight. We see that in basis levels at ADM Direct and Decatur. Currently, their bid is $1.80 over the futures price. Commercial demand is still high, and the planted acres report last week showed a decrease of over 2 million acres in soybeans this year. Again, Managed Money controlled markets again this week. The trend this whole time has been sell commodities to buy the U.S. dollar, which is trading at a 19-year high due to fear of recession. Friday, the recession trade was on hold as the U.S. jobs report came out, and it had a good large number showing the U.S. economy added a decent amount of jobs in the month of June. In regards to grain marketing, it will be key to remain patient and attentive, and we are trading above the corn spring price on your guarantees about 6% higher than the spring price of $5.90. and below the soybean spring price of 14.33, about 3% below that. So it's important to know your profit points per acre and pay attention to where your crop insurance guarantees are as well. In regards to crop insurance, we are ready to certify your acres if you haven't done so already. On your acreage report, we do need to have this done by Friday, July 15th, which is this week already, to match it up with your 578 to certify your coverages. If you have any questions on your guarantees or premiums, please reach out to us. We can help you with those. Other than that, if you have any questions or comments, please reach out to Larry, Susan, or I. We hope you have a great weekend, and we want to thank you for your business.